8,000. That's Goldman Sachs' new S&P 500 year-end price target. And it just dropped today. Most investors haven't processed what this actually means for their money yet. Here's what's really going on, and what you should be thinking about right now before the rest of the market catches up. Goldman Sachs just raised its S&P 500 year-end target to 8,000. That's not a typo. The S&P 500 hit a new all-time record close on the same day this call landed. Same day. That's not a coincidence. That's confirmation. Goldman's analysts are pointing to one primary driver: corporate earnings. Not sentiment. Not momentum. Hard earnings growth. The kind of fundamental muscle that sustains a bull run. And here's the number that should stop you cold. From current levels, Goldman's 8,000 target implies roughly 8 to 10% additional upside still sitting on the table. That's meaningful return left in this rally. Meanwhile, Micron is leading a broad-based tech surge today. Semiconductors aren't slowing down, they're accelerating. Your tech-heavy ETFs are feeling this right now. And Goldman did something else today that matters just as much as the price target. They explicitly rejected, in writing, comparisons to dot-com bubble valuations. They're not just bullish. They're defending the bull case with fundamentals. But here's what nobody is saying about this yet. When Goldman Sachs, one of the most institutionally influential banks on the planet, publishes an 8,000 target, retail investors aren't the first to move. Institutional desks are. Portfolio managers running billions in AUM read this note before you woke up this morning. The smart money is already repositioning. The question isn't whether Goldman is right. The question is whether you're positioned before the crowd figures it out. Think about it. Institutional buy pressure from a Goldman-endorsed thesis doesn't trickle in. It floods in. And retail investors sitting on the sidelines waiting for a pullback may be waiting against a tide of institutional capital. First, review your broad index fund exposure right now. If Goldman's 8,000 call plays out, S&P 500 index holders capture that upside automatically. Sitting in cash has a real opportunity cost here. Second, don't ignore sector rotation. Goldman's earnings-driven thesis favors quality growth names. Tech and semis are already showing it. Consider whether your ETF allocations reflect where the earnings power actually is. Third, watch the narrative. Goldman just publicly killed the bubble comparison. If that framing takes hold in financial media over the next 48 hours, retail sentiment could shift fast. Sentiment shifts drive flows. Flows move prices. Goldman Sachs just put 8,000 in writing, backed it with earnings fundamentals, and dismissed the bubble argument in the same breath. That's the single most bullish institutional statement of 2024. The S&P 500 hits 8,000 by year-end. Agree or disagree? Drop your number below. This video is for educational purposes only, not financial advice. Always consult a qualified advisor before making any investment decisions.